Good afternoon. You're listening to Gambling with an Edge. Now here are your hosts, Bob Dancer and Richard Munchkin.
Hey y'all, Richard here. I just wanted to let you know that this episode was recorded in studio, and I found during editing that we were having some trouble with Bob's mic. So you will hear some rough patches in this episode, and hopefully we will get that corrected before we record in the studio again. Thanks, and here's the show.
Good afternoon. Welcome to Gambling with an Edge. I'm Bob Dancer.
And I'm Richard Munchkin.
Today, our guest is tax expert Russell Fox. Russ comes and joins us a couple times a year and has been doing so for the last few years, and we're very glad to have him again. Russell Fox, welcome back to Gambling with an Edge.
It's a pleasure to be back.
Burning question. What's going to be in the next tax law?
If anyone has a working crystal ball, your guess is as good as mine. Everything changes day by day, and until the law is actually written, which as of this morning has not happened, your guess really is as good as mine.
Well, but if they do pass something, would it take effect January 1st, for next year?
Some of the proposals had retroactivity, for example, on capital gains, but those in theory have been dropped. The problem is if you're going to add 3.5 trillion or 2.5 or 1.5, because the number keeps changing, as expenditures through reconciliation, you also have to add the same exact amount as income coming into the government. So nobody really knows. Most likely, most of the things will be effective 1/1 of 22.
Okay.
Oh, right. So which does not affect the 21 tax year. Okay. Now, has your life as a tax professional been any different over the pandemic than it was before the pandemic?
Unfortunately, yes. Almost every tax professional I know never got a break after the 2020 tax season. In tax, we're always a year behind. The 2020 tax season was preparing 2019 returns. Because of everything to do with PPP loans, ERCs, innumerable tax changes affecting both individuals and businesses, we didn't get a break last winter. We were working bad hours or normal hours that were in-season hours basically until about a week ago from this taping date. Now I'm back to what I call nice relaxed hours, which is going to be enjoyed for the winter.
So we're ruining your relaxed hours by having you here. All right. We got lots of questions from our listeners, many of which have to do with sports betting. Many have to do with cryptocurrency. So we're going to start off with one that has to do with neither. Do Canadian poker players owe income taxes?
Well, at this point in time, if you're an amateur gambler in Canada, you do not owe income tax. That's settled law. Professionals is unsettled. Jonathan Duhamel won the World Series of Poker main event back in 2010. He did not put anything on his tax return, and he's Canadian, for his gambling win. The Canada Revenue Agency, the equivalent in Canada of the IRS here in the United States, said he was in business and he should file a tax return. He disagreed. That case is going to be heard, the wonderfully titled Duhamel vs. Her Majesty the Queen, this November, or basically right about when this is airing, with a decision likely in early 22. If you are a professional gambler residing in Canada, watch this case because it's going to probably give complete clarification on whether professional gamblers need to be filing tax returns in Canada.
What about if they win money in the U.S.? Do they owe any U.S. taxes?
They win certain kinds of things that generate a W-2G or 1099 miscellaneous, they will have 30% withheld. That's per normal law. However, the U.S.-Canada tax treaty specifies that a Canadian can get back his withholding by filing a Form 1040-NR based on his gambling losses. He has to note his gambling losses. One problem with that is right now the IRS is taking on average 16 months to process a paper filed return, which these would have to be paper filed. So, for example, somebody claiming 2020 losses filed a return, say, in April, will probably get it back, next summer.
Wow.
Next question. If you make your living making gambling videos, using your own money on slots and table games, and posting them on YouTube, I assume you'll be able to deduct the flights to Las Vegas or wherever, hotel stays, food and rental cars, but will you be able to deduct gambling losses beyond the casino win-loss statements or gambling loss, the amount you lost making the YouTube gambling videos?
Just like any other gambler, your gambling losses are limited to your gambling winnings. You can't deduct excess losses, period. That is Section 165D of the tax code. Until Congress changes the law, you have no chance of prevailing. The business of making videos and your gambling activity will be considered separate by the IRS.
So you can have losses in that business or expenses in that business.
Absolutely. I mean, most businesses, when they start, lose money. It's very normal for a new business to lose money. You have startup costs. You have to invest, for example, in doing videos. You're going to have to invest in video equipment, computer equipment, sound stuff, myriad of things that are going to cost money, and the revenue will start trickling in over time. So losing money up front for a video production business, absolutely normal. For gambling, not allowed.
Have the tax implications on daily fantasy sports changed?
Back around October 15th of 2020, the IRS released 2 general counsel opinions on DFS. The first of them affected just the DFS sites and said that the sites owe the wagering excise tax. And that's a tax of 0.25% of the amount wagered for expressly legal wagers and 2% on anything else. For example, sports books here in Las Vegas owe the wagering excise tax, and they pay 0.25% based on their handle. The DFS sites are fighting this, but they're going to have an uphill fight. And will probably end up in tax court and probably in courts of appeals, but their chances of prevailing are not good. Second, some tax person out there, some individual, tried to claim his DFS losses against his DFS winnings, claiming they were gambling. And he won. The general counsel agreed. This is gambling. You're allowed your losses up to the amount of your wins. That has 2 implications. And again, the DFS companies are fighting this. First, it means you can't deduct excess losses, but, gambling losses are allowed up to the amount of winnings. Second, the DFS companies should be issuing W-2Gs because it's a gambling activity, not a 1099, a contest. This is actually pro-taxpayer because under the contest ruling, you aren't even allowed to deduct losses. You can only include winnings.
So why are the DFS people fighting this one?
Because if you are engaging in gambling, you need a license. The DFS companies operate in many states. They don't operate here in Nevada because it has been Attorney General, I want to say it was Laxalt, ruled that DFS is a form of gambling and they needed a license. But they operate, for example, in Texas. In a gray area.
But it's the same companies, right? It's still DraftKings and FanDuel that are taking legal sports bets.
Well, there is no sports betting right now in Texas. So right. they're taking legal bets in various states, and in those states it's not a big deal. But they're taking bets in gray area states where it's neither expressly legal or expressly illegal on DFS. And if it is gambling, then it is expressly illegal because in every state in the union, all 50 of them, in order to be conducting gambling, you need a license.
Yeah, they are so, talking out of both sides of their mouth. I remember before they exploded, before online gambling came and DFS was just starting to take off, I ran into one of it might have been the CEO of either DraftKings or FanDuel at G2E. And I said, we'd love to have you come on Gambling with an Edge to, talk about DFS. And at first he was really interested and excited. And then I told him the show was called Gambling with an Edge. And, he turned white. And he was like, oh, no, we're not gambling. We have nothing to do with gambling. And I can't go on any show that talks about gambling.
Unfortunately, the legal definition of gambling in the tax code is called wagering. And to have something that is gambling, you need a prize, which obviously DFS has, consideration, cost to enter, and an element of chance. And you're going to have a hard time convincing me there's not an element of chance. I mean, what if your star player gets hurt? He trips. I didn't watch much of the NFL game last night in that downpour in Santa Clara, but it was pretty obvious, people are going to get hurt in the rain. Lots of drop passes, some caught. And those kinds of things, that's luck. And to say that there isn't luck involved is just lying. And mind you, it's very skillful gambling, but it's gambling.
You mentioned a few minutes ago that if things were appropriate, then the DFS companies would issue W-2Gs. As I remember from reading the W-2G rule, it's they issue W-2Gs for certain specified games, including slots, including video poker, including some. And if a game is not on that list, then they do not issue W-2Gs. Am I reading that wrong, or?
That's, there's a general rule, which is if the prize is, I want to say, I didn't look at this before, but $600 or more, and your odds in the cost to enter is 300, and the cost to enter ratio is 300 or more, a W-2G is issued. That's in addition to all the specified things like poker tournaments. Like a poker tournament, net win of 5,000 or more issues a W-2G. But a DFS contest, let's say you enter for $1 and the prize is $1 million, that would definitely cause a W-2G. It would also be event by event. Many of the DFS contests would no longer be tracked. Many of them, though, would require separate W-2Gs because it would be by event, which would be a lot more paperwork, a lot more of a hassle to the DFS companies than saying, okay, John Smith bought in for $10,000 a contest. He won $20,000. Let's issue him a 1099 for $10,000 because that's his net profit.
All right, changing subjects. In a previous episode of this show, you, Russell Fox, stated that credit card rewards are only taxable if they're redeemed for cash. Is a credit on your credit card balance equivalent to redeeming for cash?
No. Make that nice and short. No, it is not.
Until you redeem it. If you redeem it. Describe the process for reporting income for recreational advantage players, including reporting winnings not combined with a W-2G, reporting winnings from casinos in multiple states, recording winnings from a variety of games or gambling activities, and permissibility of reporting losses as itemized deductions. I define recreational as a person whose primary income comes from a non-gambling source, but they generate supplemental income from advantage play.
All amateur gamblers have to separate out their winning and losing sessions. It is vital if you're an amateur gambler, frankly, any gambler, to keep a log of your own play. The casino logs are notoriously wrong, so the win-loss statements you get, they're secondary evidence. You want to keep your own log, which is very simple. In any case, all your winning sessions get added as other income on your tax return on Schedule 1. All of your gambling losses up to the amount of your wins, again, total by session, are an itemizable deduction on Schedule A. Of course, if, for example, your winning sessions total $50,000 and your losing sessions total $5,000, and you have no other itemizable deductions, you might be taking the standard deduction. And this year it was $12,400 per person and not itemize. But you always have the right to itemize.
Can't a person in that situation, even though they have income from let's say a job, if they're conducting that as a business and it sounds like he's showing a profit. Couldn't he also have a Schedule C as a side business and file that as a professional gambler? Wouldn't that be better for him?
Might be better, might be worse, and also it depends. A professional gambler has been defined by the U.S. Supreme Court, so there's no arguing this, as somebody who's gambling on a regular basis for their livelihood to pay their bills. Do some amateur gamblers, efforts rise to that level? Absolutely. Do others? No. Some people will do it, 3 or 4 times a year. Mind you, they're making good money, but that's not regular. They're just, every so often they take a trip to their local casino or whatever. So it always is based on facts and circumstances.
But so is this unique to gamblers? I mean, let's say that I have a thriving podcast business, but on...
This is fantasy, folks.
but on the side, let's say I'm a carpenter and I build cabinetry and, sell some of that, even though my primary business is podcaster. Can't I set that up as a Schedule C, even though it's not, regular and I'm not earning income every week from it,
Well, the same rules actually apply to all businesses.
Oh, really?
Yes. And the key here is, again, are you trying to do this for your livelihood? Mind you, you might have your day job, say salaried, be 80% of your livelihood and side businesses being 20%. But it can also be considered a hobby. Things that are hobby, you're not trying to make money. A key point is, are you making money at this activity? If you're making money on a regular basis, you're going to eventually have a business. Okay? And mind you, you can also be an amateur gambler. Sometimes being an amateur gambler is better tax-wise because amateur gamblers do not pay self-employment tax. Professionals do. Self-employment tax adds up. 15.3% on 92.35% of the net income of your business is hard to beat through business expenses. I wanted to also touch, though, on state tax issues that this individual brought up. Not all states allow gambling losses. If you're an amateur gambler, you're going to file a state tax return for many, but not all states that you're conducting business in. Some states don't require it. For example, both New Jersey and Connecticut expressly in the law that allow gambling in those states says that no non-resident gambler who otherwise doesn't have nexus to those states has to file a tax return. So if you, for example, live in New York State and you go to Atlantic City and win some money, and you don't have to file in New Jersey. Don't have to file if you go to Foxwoods. Same rules. So each state is different, and you have to look at each state differently.
But that person does have to file their gambling winnings in New York. Where they
if you're a New York resident, you owe New York tax on your worldwide income, be it in New Jersey or New York.
That's a small world if it only includes New Jersey and New York. But let's go on to the next question anyway. How is travel time handled if the IRS questions your full-time status as a gambler? I deduct the per-mile rate for the vehicle as a business expense, but what about the time I spend traveling? If I were a salesman for a corporation, I would be compensated for that time on the road. How does it IRS look at the time a wagerer spends traveling to and from casinos?
When you are a sole proprietor in any business, your time is not deductible, period. You cannot deduct your time whether you are a tax professional or a professional gambler.
Short and sweet. How do you gather all of your W-2Gs if you've possibly lost or misplaced some? Some casinos have a request form on their website, but many don't, and obtaining them is a bit more nebulous. Who can you talk to at the casino to get them mailed or emailed to you?
For most casinos, you need to speak to either the accounting department or the cashier/cage department. It varies by casino, but if you call and ask for accounting and say, I lost a W-2G, I need to get a copy, the accounting department, if they don't handle it, will direct you to the cashier department. Additionally, you can try to get this online through the IRS website. On the IRS website, at the top, there are 8 rectangles. One of them says Get Your Tax Record. If you click on that, you will see something called Get Transcript. And you can get a wage and income transcript, which should list out your W-2Gs. Unfortunately, the IRS does not guarantee it being 100% accurate until June of the following year. So that's June 2022 for 2020.
Oh, for 2020,
yes.
not 2021. Wow.
Yes.
Well,
So-
it's for what you would file in 2021, but it's still 15 months after most people file their returns.
Right. You can't wait till October 15th and make sure because you're even behind that.
It will be more accurate in October than it will be in June. They're not available until generally late May, Memorial Day, or June.
So for people who file April 15th, which I'm assuming is most people, I don't know that, you would have a better idea than I would. It's just not available.
It is wage and income transcripts for the preceding year are not available until roughly Memorial Day.
That's interesting. Is it better to file as a professional gambler or not if you're a slot AP who hits a large number of hand pays per year? Hand pays, of course, come with W-2Gs. If so, would the casino have any way of knowing that you filed as a professional gambler?
Well, the casino isn't going to know how you file unless you hand them a copy of your tax return, which you shouldn't. As far as being better, you rarely get a choice. As we discussed a little earlier, professional gambler has been defined by the Supreme Court as somebody who gambles on a regular basis for their livelihood. There are a couple exceptions to this, by the way. Full-time students, that's considered a job. Being retired, if you're retired, that's a job. And if you're in one of those categories, you get a choice. But otherwise, if you are gambling to pay your bills, you're a professional gambler. If you're not, you're not.
Wait. So is retired a category that you put on your tax return?
Yes, that's an occupation.
Oh, and so I have if I put retired, I have a choice of whether my gambling is professional or amateur?
If you're not gambling that many hours, yes.
Huh. Good to know.
And is there...
But I'm retired.
Again. What are the acceptable ways to define a sports betting session as an amateur in calculating wins or losses? Looking for an understanding of not only time period, but also across sports and books.
There, at this point, is very little tax case law on this subject. And the only real decision is the decision allowing session methods. So session methods are clearly allowed. The problem is with a sports bet, if you consider an individual bet, that's a session. Okay, you're betting on a football game. That has a beginning, it has an end, the bet is over. Now, if you have related bets, for example, you're going to bet on Tampa Bay winning and on Tom Brady's passing yardage. Those would probably, I would think, be considered related bets, and you might be able to put them together. You need to talk to your tax professional about them, and therefore consider that one session, where you might win on the Tampa Bay bet and lose on the passing yardage. But if you're betting on, say, the World Series, Atlanta over Houston or vice versa, and Cal beating Arizona in college football, those don't have anything to do with each other. Those would probably be the courts and the IRS be considered separate. That means for sports bettors, you can have some pretty large numbers of winning sessions and losing sessions.
Yeah, I just want to say this is something you should be doing anyway, not just for your tax records, but if you're a sports bettor, you should be listening every bet you make, because how do you know you have an edge unless you acquire data? And, you want to know, oh, you know what? I've been winning at college football, but I'm not winning at Major League Baseball. Maybe I want to stop that or whatever.
And if you're in business, the IRS requires, and the tax code actually has a requirement, you keep your own records. It is mandatory if you're in any business to be keeping books and records.
Does one need to pay taxes on a futures bet if the money won isn't withdrawn and it remains on the sportsbook app and then used to make daily bets on other games?
The rule of constructive receipt governs this. This is a concept from the 1920s. So when you have income and it is unfettered, in other words, you have access to it, either you receive a check, you receive cash, or it's put in your account without any restrictions, you have income. Here in this description, once that money is put in your account and you can use it, you have income. Withdrawal does not matter.
In legal sports betting jurisdictions, should a bettor clear or withdraw from all their apps every year for tax purposes?
They do not need to do that. You just need to be keeping your own records, know how much you won, know how much you lost. Again, the rule of constructive receipt governs.
How are free bets treated tax-wise? Now, for those who don't know what a free bet is, if you have a $1,000 free bet without a VIG, that would mean you make your bet on any two teams, well, or parlays, but two teams. If you win, you get the money plus your money back, and the bet's over. If you lose, you get another bet for $1,000 without paying anything else, and presumably you're going to win that 50% of the time or so, depending on what the bet is. So the free bets are worth approximately half value minus the VIG. And I'm sure that clarified it for everybody.
Boy, that was like the worst description of a free bet I've ever heard. But
all right,
but
so
go ahead.
Given that that's what at least one of our co-hosts think a free bet is, how would you treat that tax-wise?
Well, an easier way of looking at it is most free play, you only have access to the funds after the bets are concluded. So if you go in a casino and a slot free play is easier to describe, you get $20 of slot free play, you put it in a machine, and you're done betting that $20 and you have $10 credit, you've won $10. Very simple. So whatever you can cash out, that's a win. Whatever you don't is irrelevant. Let's say you make a $20 sports bet, free play, and you lose. It's irrelevant. It was free. You have no loss you can take because it wasn't your money. You have to spend something to be able to deduct it. You have no income, clearly, because you didn't win. So it would be a nothing.
So if a casino gives you $2,500 in show-up money, and then you gamble on whatever your results are, that $2,500 is not taxable.
Well, I didn't say that. I said whatever you cash out is taxed.
Well, wait, that's a gift, show-up money, right? That's different than a free bet. Show-up money is the casino says, we'll give you $2,500 just to show up here and play.
Yeah, but it's an accession to wealth. When you have accessions to wealth, it's income. Cash is income. So if you can
they give you a Rolex instead?
Well, the general rule on comps are most comps are marketing gifts. The problem is, for example, you are comped to drink. That's a marketing gift from the casino, basically allowing you to wanting you to stay longer. If you are comped a car or a Rolex worth $75,000, that's an accession to wealth. Very large items are supposed to be declared.
Is there a limit, a cutoff?
There's nothing specific written into the tax law. It's one of these things where, for example, you're comped a room at $100. It's pretty much marketing. You're comped a room at $100 million. Would you argue if I gave you a Lamborghini? I have no idea what they sell for. My business partner does because he loves cars. But a $150,000 car, that's a nothing? Maybe.
No. I mean, I think there is some... Outside of casinos, there's a gift tax, right? So, which is what, $20,000 or?
Well, a gift tax. Anyone can gift anyone else $15,000 a year without gift tax.
15.
But this isn't a gift at all because gifts are out of love. You give your children things. Here, this is all for marketing. We want Russell Fox in the casino. We want him gambling.
Well, that is what the show-up money is.
I understand, but the problem is when it's cash. Cash is always, if you can take it out, income. So now, mind you, the show-up money, $2,500 in this scenario, you basically are forced to gamble. The casino, if I took that $2,500 and went home, the casino would A, never offer me anything again, and B, would probably demand that I give it back.
No. You had to have proved to be a good customer to get it in the first place, usually. So,
But if that $2,500 were in the form of, we're going to give you $2,500 of free play, and you have to play it through at least once to collect it, then the $2,500 is not taxable. The amount you
Correct.
earn out of it is.
Yes.
Okay.
So if you're offered $2,500 in show-up money, say, you know what, I want $5,000 in non-negotiable chips instead, and then you're covered.
Good luck with that. Okay.
Actually, most casinos would much rather give you non-negotiable chips than actual cash. Because they know you are, for sure, you have to bet them. You can't cash them out.
And most casinos would rather give you free play than cash. So since they would, we're going to have a break for commercials right now. The South Point has more than 10,000 games, returning more than 99%. This is more such games than anyone else has. In October, they still have the $500,000 plus guaranteed Monster Money Madness promotion. At all times during the month, there will be 2 casino-wide progressives going. The smaller one ranges from $1,000 to $2,500 and will be hit on average 3 times a day. The larger one starts at $10,000 and must be hit by $25,000. Should you be playing for the larger one when it goes up and you're not the actual lucky winner, you will receive $25 in free play on your card. To be eligible for both drawings, you must have your card inserted and have played at least $1 in the previous minute. If the South Point has your email address, you will get extra weekend free play offers a few times a year and a monthly announcement on the last day of the previous month featuring new items for the next month. This sometimes includes food specials, sports book or poker room promotions, along with entertainment options. Sometimes this information is useful if sports book or poker happen to be in your wheelhouse.
Hey guys, this is Colin from BlackjackApprenticeship.com, and if you're serious about card counting, I'd encourage you to check out the Blackjack Apprenticeship membership. It has the training tools you'll need to beat the game, like our comprehensive video course and our training suite, so you can learn each skill and virtually test yourself before ever stepping foot in a casino. It also includes the tools you'll need to succeed, like our pro betting software, casino database, results tracking software, and access to a community of like-minded Advantage players to network with in our members forum and chat room software. You can find out more at blackjackapprenticeship.com.
Videopoker.com is the best place to play lots of games. If you sign up for the gold membership, $8.95 a month or $79.95 a year, this allows you to get correction on most of the games. The game of the week is Split Card Poker. This is a 10 coins per hand game where periodically on the deal or on the draw, never both, you receive a split card. A split card may be any card. Once the split card is chosen randomly, the additional card may be with equal probability the same card, the card lower, or the card higher. For example, if the ace of clubs is a split card, it is equally likely to become the ace king of clubs, the ace deuce of clubs, or 2 aces of clubs. The only pay schedule addition is 5 of a kind on non-wild card games and 5 deuces on deuces wild variations. All right, we are back with Russell Fox. If a casino, we've already answered this, but we'll do it specifically. If a casino is a casino win-loss statement sufficient proof to write off your W-2Gs?
As I said before, you should keep your own gambling log. And it's not hard. IRS personnel actually love win-loss statements. They believe anything on paper is accurate. But if you look at every single win-loss statement at the bottom, there's a disclaimer that it shouldn't be used for tax purposes and is not guaranteed to be accurate. A log is not difficult. You need to note the date, the casino name, the game you're playing, as simple as video poker, by the way, the start and end times, the table number if you're playing a table game, and the result. You can use a paper log or an app. If you use electronic, make sure you email your log to yourself once a month so the IRS doesn't believe it was created the night before an audit.
Which sounds very easy for an accountant, but too much hassle for many other people.
The tax court will have no sympathy for you if you don't do it. It's really not that hard once you get in the habit of doing it.
Other than a win-loss statements from a casino, what can we use to prove our gambling profits? Is a simple spreadsheet good enough?
Again, keep a log. That's your choice. And can you do that on a spreadsheet? Yes. But again, you should email it to yourself once a month so that you can prove to the IRS you didn't create it the night before an audit.
Next question. I've been paying my friends to create sportsbook accounts to take advantage of welcome offers and other promotions. Some of my friends are receiving government assistance in one form or another and are worried about the tax implications of having sportsbooks winnings in their name. I have a simple contract giving me permission to use their accounts and a bill of sale I've typed up. I've told them not to report the sportsbook winning for which I assume the tax liability, only what they earn from the sale of their accounts. If they're audited, would those documents be enough, or am I screwing my friends over?
First, I cannot comment on any legal aspects. I am not an attorney. I'm a tax professional. So, generally, each person is responsible for their own income. If I earn income, I pay tax on it. If Bob earns income, he pays tax. If Richard earns income, he pays tax. The only issue really here is if any tax paperwork is issued to the sports bettor. And this might be, or bettor, might be on like offers. Sometimes, there are bonuses and things where 1099 will be issued. Now, if that individual is keeping that, all's well and good. But if that's coming back to the person who's paying them, then that other individual needs to issue a 1099 to the other person so that the IRS knows it wasn't Russ who got the $1,000 of income, it was John.
I know that in the past there used to be another form. I had a friend who ran a slot team, right, where he had a lot of employees who were playing slots for him.
54 something.
Form 5754 is what you're thinking of.
Yeah.
There are two issues. First, not all casinos will accept it anymore. None of the Caesars casinos will.
Oh, I see.
Okay, so it won't, you can fill it out, you should, but it doesn't do you a bit of good if the casino says, oh, that's nice. The second issue is most of these 1099s are not issued until year end. And you don't know they're getting one until come January in the mail you get it. It doesn't do you a bit of good after it's issued.
So the client should 1099 John, the guy, the professional. I'm the client. I should 1099 the professional that I'm giving the money to and say I paid this money to him.
Correct. Yeah. And the other issue which will come involved here is everybody needs to keep good records because the IRS in an audit situation of the individual doing the betting probably will want proof there was such a contract, probably want proof that the money actually went. So not just payment to him, the 1099, but a copy of the canceled check or receipt if you're paying him in cash.
I'm not familiar with the sports betting apps, but shouldn't you be able to get a record of every bet you made at the end of the year? And if you can't, that's crazy. Like they should be providing that to you if you ask for it.
I would tend to agree, but we're dealing with computer records, and just like all of the slot win-loss statements should be perfectly accurate, you're inserting your card in, reality is very different.
I'm sure our listeners will correct me or tell me what the situation is there on the...
Well, it varies.
Yeah. Oh, on the sports apps.
Yeah. Some of them provide excellent records. Some provide... well, we don't want to use those words here.
Well, not so excellent records.
Yes, that's a better way of putting it.
All right. If Richard and I decide to split a sports bet from a legal U.S. sports book 50-50, and we end up winning $50,000 because we're really good guessers, how would we report that on our taxes?
You each report your own share of the income. It's black and white tax law. Most sports bets do not get paperwork issued. So let us assume, let's make it simple, there's one sports bet, and we bet on Houston winning game 1 of the World Series. Hey, we bet $5,000. We each chip in $2,500. We win. We're going to ignore the VIG here, and we get $10,000. We each have.
Well, Houston's going to be favored. You're going to get less than that.
I understand. I'm making this simple.
Yes.
You each get $2,500. You each report $2,500.
That's if we bet it at the window in Las Vegas. If it's on an app, then the person who won it has to declare it and then 1099 the other guy.
If paperwork is issued. Most sports bets, there is no paperwork. Sports betting, in order for there to be paperwork, again, we go to the 300 times the bet as far as the prize and more than $600 or more. A sports book bet at even money, really there isn't going to be any tax paperwork.
Oh, okay. So then it's okay for us to just each declare the $2,500.
Correct.
Assume I spend 15 hours a week doing something related to sports betting, whether it's research, building models, or placing wagers. In 2020 and 2021, I've made approximately as much gambling as I have at my day job. At what point does it make sense, or is it possible to file as a professional gambler?
Well, we discussed this a little earlier about whether you're doing it for your livelihood or not. The other thing you have to look at is self-employment tax. It's just hard to beat. Gambling itself, unless you're traveling, does not have very much in the way of business expenses. You know, you can't deduct your time. You can deduct training materials, so there's that. But there isn't that much you can deduct. So it's hard to beat 15.3%. That's the problem. Now, can you file as a professional? If it's for your livelihood, absolutely. Should you? Might want to run the numbers.
Now, so far you've just said you're doing it for your income, but what if there's have to be a certain percentage of your income? In other words, you're doing it to try to make money, but let's say you make $20,000 a year gambling and $100,000 a year at your other job. But you're gambling intending to make money. Can you be a professional gambler in that situation?
Absolutely. In fact, the seminal case on this called Gretzinger, Mr. Gretzinger was a losing gambler. But he tried. He kept fastidious records. His records were perfect. He did everything right. He was trying to earn a living. It's effort that counts. So you could have a profit of, $1 million by placing one bet. And you're an amateur gambler. Okay, you could have a profit of $1 placing 1 million bets, and you're a professional gambler. It's always based here on facts and circumstances.
All right. In your opinion, Mr. Fox, what are the approximate odds of a professional gambler getting audited compared to a non-professional gambler?
Unfortunately, ethics rules prohibit me giving out odds of an audit. I can just quote IRS statistics. And the most recent statistics that came out, and I want to point out, IRS audits are way down from when I first started in tax. I've been doing this 21 years. So these numbers are...
So thank you for your service here, for bringing them down. We appreciate that.
These also are about 3 years old, but the sweet spot is having gross income of between $250,000 and $750,000, or over $1.25 million, and your odds are now less than 5%. That's across all professions.
Wait, when you say sweet spot, you mean the opposite of that? The worst place to be is
that
between...
That is the sweet spot to get audited. In other words, this is if you're making as gross income, not net income, gross income of between $250,000 and $750,000, or over $1.25 million, you run the highest risk of audit if you're a sole proprietor. And that rate is a little under 5%. When I first started, it was close to 7%. So it has definitely dropped. And this is across all professions. There is no statistic out there for audit rates on professional gamblers. Most of the audits that I've been involved in with professional gamblers are because their numbers are out of whack over normal numbers. The IRS scores every single tax return for potential for audit. And it's the method they use is not published because the IRS doesn't want people to know that. But if, for example,
you don't think people would game the system, do you?
Nah, no chance. But let us assume you have gross income of $100,000 and you claim $100,000 of travel expenses. There's a problem there. You're not making money. Now, mind you, it could be completely legitimate. Consider a poker player who has a bad year traveling the tournament circuit. Your cost could easily exceed $100,000. And if you've had income in other years of $300,000 here net income, that's reasonable. So again, it's based on facts and circumstances. But the IRS computer is the one that chooses audits, and they're just looking at straight numbers. Things like that would probably have a higher chance of an audit being generated.
All right. This listener says he lives in California, which is a pretty big state. Do you know any good CPAs out there in California who specialize in pro gamblers?
I know only 5, including myself, in the entire country. 3 of us are here in Las Vegas, 1 is outside of Atlanta, and 1 is in the mid-Atlantic. And that's because if you consider it, most gamblers lose. These casinos were not built with winners in mind. Actually, they are, but very few. I mean, casinos are money-making businesses. Most people come to Las Vegas, for example, and expect to lose. So there isn't, huge demand for tax professionals specializing in gambling. Additionally, there's something like 300,000 to 500,000 tax professionals of all sorts. Many will do one professional gambler's return. They're not specializing in it, but because John has been using him for the last 20 years, and now he's a professional gambler, John still goes to Ralph.
But there's no reason that your tax professional has to live where you live, right? I mean, nowadays, everything is electronic and you can, you can have a tax professional anywhere.
That's absolutely correct. The only jurisdiction I am not allowed to service in the United States is Puerto Rico. Puerto Rican law says that all tax professionals preparing Puerto Rican equivalent of Form 1040 must reside in Puerto Rico. So other than Puerto Rico, I can prepare a tax return for any jurisdiction in the United States. Many people, though, want personal interaction. And if that's the case, I'm not going to California to prepare your return. Okay? When I go to California, it's to visit family. Otherwise, I'm not traveling to California these days. And definitely not for work.
One listener says he usually does his own taxes using the TurboTax program. Can professional gamblers do their return with TurboTax?
Sure. You can use any software you wish. Do it yourself. You can do it on paper. It's allowed. Should you is another question, which I am going to leave to the listener, but I will only comment, we see more errors with self-prepared returns than we do professionally prepared returns. And frankly, you'd expect that.
So the next question from the same one is, what do CPAs approximately for professional gamblers? This guy has $250,000 a year in W-2Gs and all bookkeeping done beforehand.
I cannot quote a specific number because of ethics rules. I'm specifically prohibited from quoting rates except to an individual basically in front of me or giving a quote. I cannot do that generically. That would be considered solicitation of business by the IRS Office of Professional Responsibility, so I can't say that. However, I can say that all tax professionals in one way or another charge based on the length and complexity of the returns. Simply put, a lot of it, how much time we have to spend on the return. Most of it comes, by the way, at least in my practice, to non-gambling parts of the return. Things like F-bars, cryptocurrency, rental property, not the gambling, because that's our specialty area. We know it very well, and it doesn't take us very long to do the gambling portion. But if you have 20 rental properties, it's still going to be a slug to go through and deal with all 20 of those properties.
But generally speaking, your position is hiring a tax professional is penny wise, or is a good investment for most people.
For many. I mean, if you're, for example, all you have is a W-2 and you're renting, there's no reason to hire a tax professional. You're not, let's assume somebody not doing gambling here. All he has is a W-2, he's renting. I'm not going to find anything. Now, if you want the comfort of me doing it, fine. The two reasons we see people, we have clients are first, expertise in a specific area. I know gambling very well. I have other areas of expertise. Rental properties and cryptocurrencies are firms' 3 areas of expertise. Second is saving time. Many people just don't want to deal with it anymore. And obviously, you hand off the work to us. Doesn't mean there isn't some time you're going to have to spend on it. You still have to review your return. You still have to provide us all the information. I'm not going to know what you made in gambling. You have to tell us that. Or have your bookkeeper tell us that. I'm not going to know what your rental properties made and what those expenses are. I'm not clairvoyant.
Yeah, there are certain jobs that are, to me, are not DIY cost effective. Tax prep is one of those. I'm not going to try to save, a few $100, by doing it myself.
You haven't.
No, I mean, not just the amount of time it might take me to try to slog through it, but just, that's what professionals are for,
Well, it's always up to the individual.
Oh, yeah.
I know some very successful professional gamblers who do their own returns, mainly because they want to, and slug through it. That's their decision. And who am I to criticize somebody?
All right. Have the laws about taxes on cryptocurrency changed in the past couple years?
Well, the IRS is taking 3 years to release guidance on cryptocurrency. In 2020, they released guidance on airdrops, which began in 2017 or thereabouts. So the IRS is really on the ball here. If you detect some sarcasm, you're right. Congress, in every one of the proposals that's going to change the tax law for next year, is adding more regulation to cryptocurrency. So I can tell you, will things change for next year? Definitely. What I expect to happen is no more of wash sales. One of the benefits of crypto, unlike regular stocks and bonds, if you, for example, take a tax loss on IBM, you bought it for $100 a share, it's at 90, you sell it to get the loss, you can't immediately reinvest. If you do that, you're not allowed to take that loss. You have to wait 31 days. With cryptocurrency, you can take a loss and immediately repurchase the same investment if you want to hold it and get the tax benefits. That is almost certain to change. Most likely for 2022 onward, not for 2021. There's a ton of regulation coming for crypto exchanges. To think it's not going to happen, dreaming. The IRS, Congress all believe this is an area where people are not reporting everything because no paperwork, no tax. That's not how it works.
It works like that for a lot of people.
Yes, unfortunately, the law is a bit different.
Well, that and the fact that they sell it as, something that the government can't track. That's sort of the big feature, right?
Well, I have seen some recent activity in the audit world related to cryptocurrency. Now, mind you, some of this is relating to Coinbase, which was summoned and provided records to the IRS. I know of at least one individual who somehow neglected to report it and has been audited on this issue. So the IRS is absolutely looking into crypto. IRS Criminal Investigation Unit is a very high priority for them. They have tools. Basically, cryptocurrency is not anonymous, it's pseudonymous, meaning you think it's anonymous, but there are tools to track it. Simple thing is, if you report your stuff, pay your taxes, nothing bad is going to happen. I strongly urge that. As to the specifics of what's going to come out of Congress, if if you got a good working crystal ball, please call me. Let me know. I'd love to give my clients advanced knowledge. I haven't a clue. Nobody knows at this point.
All right, last question for you. If our listeners want to get in touch with you, what's the best way?
My email address is rcfox@claytontax.com. Website is claytontax.com. There's a contact form on that website. It's probably the easiest way of getting in touch with us. You can call us during business hours. I mean, we are a 24, we're not 24/7, but we are a 12-month business. We are there, working hours, Monday through Friday.
Yeah, and I'll put links to all that on the show notes.
Good. Always very informative, and you make it very entertaining. Thank you very much. At the end of our show, we have a recommended section where each of us tell our listeners something that we've discovered recently and want you to know about. So, Richard, you go first.
Yeah, I just watched a series called Maid on Netflix, and it's kind of a depressing show. It's about a young woman with a daughter who basically finds herself homeless. And it just seemed to me incredibly frustrating because it seemed very, very realistic to me. And it made you just go like, how do you get out of this hole of poverty? I mean, especially with a kid, you know what I mean? And anyway, I thought it was a really well done show. As I say, a little bit depressing, but
so if you're in a mood to be depressed,
yeah, right.
Does something like that make you want to tip more, or like when you're staying in a hotel room or something, and the maids clean it? Does watching that make you think these gals work really hard and da-da?
Well, it actually made me think sort of bigger than that. Like, what can be done for these people who are just like stuck in these, trying to live in their car with a kid, and you have to get a job, but where's the child care? Because her mother is like crazy, and her father is absent, and her husband beat her, and I mean, it's just like, man, how do these people survive?
All right. Well, my recommended isn't as depressing as that. I'm recommending a book called A Most Clever Girl. It's by Stephanie Marie Thornton, and it's historical fiction. It's about a female American spy who most people have never heard of, Elizabeth Bentley, whose spy career spanned from the mid-1930s through the mid-1950s. It opens up with a woman coming to her door in late 1963 with a loaded gun, informing her that she will be killed because of the things she did. Bentley invites this woman in and basically says, "Let me tell you my story, and if you still think I deserve to die after you've heard it all, be my guest." It then proceeds somewhat like Scheherazade in the Arabian Nights tale, where Bentley continually tells just enough to keep her wannabe assassin wanting to hear the next part as well. I found the novel intriguing, as well as educational with respect to what went on with American Russians spying both ways before and after World War II.
So this woman really existed?
Oh, yes.
Huh.
It's just a novel. So at the end, she says, well, I combine these three characters and da-da-da. But it's basically true. It doesn't pretend to be 100% historically accurate, but I've read a number of books concerning that general subject and time period, and this one had information I didn't know. I enjoyed it. Russell Fox, do you have something to recommend to our audience?
Yes, I'm going to recommend a restaurant in one of the most unlikely locations, the Circus Steakhouse. Went there
in Las Vegas.
Here in Las Vegas. We went there last week, and first of all, obviously the Circus is, what it is. But the food was excellent. It was what you want in an old-fashioned steakhouse. The steaks were excellent. Everything cooked extremely well. It is not, inexpensive. It's sort of the opposite of the Circus buffet, which thankfully to millions of children's palates is closed. But the Circus Steakhouse, well worth it if you want a good steak at what are probably normal steakhouse prices here in Las Vegas, and one at an unlikely location.
You know, I haven't been up to Reno in years, but I used to really like the steakhouse in Reno, Circus also. So I don't know, maybe it's still good, but yeah, that was good back then too. Maybe our listeners can weigh in on whether Circus Steakhouse in Reno is still good too.
All right. Thank you, Russell Fox. Thank you, Richard. Go out and hit lots of royal flushes, everybody. Good day.